Hey, good morning, everybody. Welcome to another Daily Market Report hosted by Mike Bjork here. And today we got short economic news releases today. Tuesday, July 10th. And we got one item here, and that is the NFIB Small Business Index, and this is for June's numbers. So back in May, we had a 94.4, and what that means, and then there's no forecast. So actuality came in at 91.4. So what that did was, this is the confidence level of small businesses. It's an index to gauge what the small businesses confidence level, where the economy is moving. And obviously it went the opposite direction from May to June. So we'll have to kind of keep an eye on that as they're kind of seeing a slowdown a little bit, as we've been seeing some other economic news kind of showing the same thing. So obviously we have to kind of watch those. Hopefully it doesn't reach to a point where we go to a recession or not. But everybody else around us is kind of struggling, so it could kind of put us in that position. So let's jump over to the headline news. And in the headline news, basically, we got the stock market's up. The stock market's kind of rallying. It's almost 12 o'clock here on West Coast time here. And Dow's pushing 100, negative 100. So it's about 97 when I last looked at it here. This report's a little bit later than I typically do it due to time constraints and some other commitments I had this morning. So I apologize for the delay of getting this out for you guys. Some of the items to note is China, their GDP is showing more slowdown, so they're showing that further reduction in China's production. So there's concern there. And then, of course, there's still concerns with Europe as to the relief funds that need to be brought up in there. So like Germany and different countries that are willing to commit to it, what is the number that they're looking at? So countries are willing to provide relief, but how much relief is the question, and that's where concerns lie. So we'll jump over the bond market, take a look and see what the interest rates are doing. And of course, with the stock market going down, we got the flight to safety, which is the bond market. And when the bond market goes up, that means interest rates are coming down. And right now we're at very unprecedented levels here. We're at, or not, basically at 106 level. We haven't seen that level. Interest rates are improving. We got better interest rates as a result. To show you the illustration of this, I did a kind of a longer chart to kind of see where we've been. And basically it's like a 2-3 year period here. And as you can see with the red arrows there, we haven't reached that level before. We knocked on 104 a few times, even 105 we really haven't been at, and now we're at 106. This kind of gives you an idea as to what we were experiencing. This is even better for interest rate wise that we experienced early 2000 range. So interest rates now are even lower than what we had prior to. So right now interest rates are incredibly attractive to a lot of people. That's probably why the housing market is showing some improvement so far this year. Hopefully that can continue. That might help our economy with manufacturing and other items maybe bringing it down. So what could potentially help us, and that's what helped us during the earlier 2000s, was the real estate. And history has shown since World War II, for every recession we've gotten into, real estate has kind of brought us out of recessions. And that's primarily because even though we're globally intertwined, this is more domestic, and this can help us out, the local economies, and has its way of working its way through from like your home improvement stores to contractors to people in the financial services to lots of different areas that it kind of affects. So hopefully we can see some continued improvement in that area. And of course, people feel better when they see their home values go up. So with that in mind, interest rates are a little bit better. Sorry for the soapbox there. And I will hopefully thank you for stopping by. Thanks for listening. Thanks for watching. And I will see you guys tomorrow. Have a wonderful day. And feel free to stop by Mike's Daily Market Report. We do have subscriptions, so you can get this emailed to you on a daily basis for free. Have a wonderful day.